Good morning. You're watching us here on Trading Hour. We come to you live from the CNBC-TV18 Motilal Oswal studio. As always, it's me and along with me, Hormaz and Ritu. Good morning and thank you for joining. You know, the one thing I have to say is
yes.
I've been around right from the time of the market was almost 100 points, and now we've seen a recovery from there. We've moved closer to that 25,800 mark and holding on into the green. That's a win. Because of the 600-point up move yesterday, one wouldn't have ruled out some profit taking and the kind of decline that we saw in the IT pack today, 6% down for that index. And the Nifty is flat. You take that. The bulls would take that.
Well, you're quite the optimist saying the 600-point up move yesterday. It was also a 600-point loss in, trade yesterday. But that said, yes, it is a cautious start to trade today. And, you're seeing on one side the IT index pulling the, broader markets down. And then you have the others trying to pull them back up. It's a push and pull in the markets
today. Proper tug of war, isn't it? And it's reliance on one side along with ICICI Bank, Mahindra and Mahindra, L&T. They are the ones that are trying to keep the bulls in play, and all the other IT names are seeing a bit of a sell-off in today's session. Not a bit, but quite a bit of a sell-off in today's session. The first couple of hours, we've seen at least 1.5 crore gone, at least in the 5 IT names that are listed on the Nifty 50 index. And the shares of Infosys are now at the lows of the day, 7.5%, Wipro down 4%, TCS down 6%. The market cap of TCS has now slipped below the mark of 11 lakh crore. So it's been a selling across the board for these IT names. eClerx is also down 9%. Persistent Systems, Coforge, all of them. The mid-cap IT is also taking a knock on the chin in today's session. So at the lows of the day is eClerx. So it's IT versus the rest in today's session.
It is IT versus the rest. But let's get back to some better news we had at the start of the week, and that is the US-India trade deal, the much-awaited deal that has finally come through. And remember, it's bringing the sparkle back in the gems and jewelry export segment, which was one of the worst hit, from near zero tariff to, 10% or so, and then all the way to 50%. And now, of course, the deal is flat 18%. Let's go across to Rajiv Anand, the MD and CEO of IndusInd Bank, to get us their view on how the bank's book was impacted. Because, among the gems and jewelry lenders, IndusInd is one that has a little more sizable portfolio perhaps than some of the rest. Mr. Anand, why don't you start by telling us that? I mean, about 3% of your book is gems and jewelry. But, overall, if you look at how much of the book is exposed, to US exports from the MSME side, and the gems and jewelry book, how large it was, and given the, impact of the tariffs, and we're seeing numbers of how the exports have come down, what was the flow through you saw in the bank's asset quality, disbursement trends?
Thank you for having me, Ritu. I think broadly speaking, the numbers that you had of about 3% of our book is in the gems and jewelries business. Like you rightly said, the headwinds in that sector have been quite strong over the last 12 to 18 months. Really, one is the whole tariff issue on one side, and the fact that really post-COVID buying from the Chinese had significantly come off as well, and so therefore to that extent. Given the fact that we deal pretty much with the largest players in this space, we don't have a SMA 1 or 2 at this point in time. But it's a given the fact that the business itself has been relatively muted, the book has not really grown over the last year or so.
So about 9,500 crore, 3% of your book, would that be the total number? And what about the other MSME book that has exposure to the US markets?
Yeah, I think if you look at the MSME, we've actually done some work around tariffs, before all this, in terms of to see whether there was any impact on any of our customers, and we found that the risk that we were running on the MSME portfolio as a result of tariffs was relatively muted, and I think we've seen various players having multiple strategies, looking at diversification of their buyer base and so on and so forth. But obviously, all those headwinds will now turn positive, given the fact that we're moving from 50 to 18, while the gems and jewelries industry is waiting to see some of the fine print at this point in time. I think clearly both the EU transaction as well as a reduction in the US tariffs is certainly very positive for the gems and jewelry industry. This is not just positive for gems, but for diamonds as well, because lab-grown diamonds is a big market in the US, and that should have a positive impact for some of our customers as well.
Just to clarify, Mr. Anand, none of these accounts had even slipped in the SMA part of your book, and had you at all increased your provisions given the tariff threat, and does that now come back down? And going ahead, what kind of a disbursement growth do you see in this book now that that tariff uncertainty seems to be behind, at least for now?
Like I said, there is no SMA 1 or 2, so the question of provisioning doesn't arise. I think it's still early days. I think market participants themselves are trying to assess, looking at the fine print as far as the whole tariff issue is concerned. But I think it's fair to say that the industry should look much better, from here, both because of the EU transaction as well as what we've seen on the Indo-US trade is concerned, and therefore, if the underlying industry does well, I think we should see some growth in this book. Too early to call, how much that will be.
Mr. Anand, in that case, now that all of these things are, at least for now, appearing to be falling into place, would you look at growing this book, since you mentioned that the book has remained flat? Although there have been no SMA 1 or 2 assets, but there hasn't been any growth either. Would you be looking to grow this book right now, or would you wait and watch for a couple of more quarters to see how things unfold and then take a call on what needs to be done?
These are relationships that the bank has run for decades, and so therefore, to that extent, we will partner with our clients, and we will have to assess the situation through conversations with them, and we will assess how much we want to grow going forward based on those conversations. Too early to call, I think.
Okay, too early to call how much the book will grow, but no stress flowing in there. Mr. Anand, quickly, since we have you here, there's been a bit of an organizational restructuring, streamlining, at the leadership level. We've seen quite a few new appointments, including a new chairman. There's been reports in the market from Piramal Finance. We've seen a few top-level exits. Are they heading the IndusInd Bank way? And, how many more new appointments should we expect in the coming quarters?
Ritu, we have a regulatory obligation which we take very seriously. Wherever and whenever senior people have joined us, we have made the statutory obligations, statutory disclosures to the stock exchanges, etc. As soon as and therefore we will continue to do so as new people join the organization.
Any plans on raising further capital, Mr. Anand? Is there a requirement, 1, and 2? Has there been any conversation with the promoters with regards to them looking to infuse more funds into your bank?
At this moment, our capital adequacy is adequate at 17% at a CRAR level, and CET1 are at about 15.8%. So currently, we are very comfortable as far as capital is concerned. So therefore, to that extent, we don't envisage a capital raise in the near to medium term.
It was more from a confidence capital raise point of view, Mr. Anand. We, of course, understand there's no requirement with the kind of capital adequacy you have. It was more from, raising confidence capital, and we understand you've held talks with some sovereign funds.
At this point in time, like I said, there is no fundraise plan on the table at this point in time.
All right. Thank you very much, Mr. Anand, for joining us here today. And we hope to hear more from you in the coming quarters as and when some of those plans materialize. But let's step into a short break for now. Up next, we're going to focus on the bond market with Manisha Gupta.
Welcome back. Shifting focus to the bond markets. Manisha is here to tell us more on just that. Manisha, morning.
Thank you so much for that, Hormuz. On Bond Street today, we're talking about the kind of issuances that we're looking at in the Indian markets right now. To begin with, let's go with the statement that RBI came up with, that 14 states have raised nearly 380 billion rupees therein in sense of bond auctions, and this came in yesterday on Tuesday, that is. But there are various bond issuance that we're looking at likely to hit the Indian private placement market in the very near future. Today, actually, you have Poonawalla Fincorp, which is looking to raise nearly 5 billion rupees. This is through 10-year bonds, and they are seeking bids absolutely today. You also have Veritas Finance. They're looking at 2 billion through 4-year bonds, rather, and they also are seeking bids today. Then it is about Tiruchirappalli City Municipal Corporation. Well, they're looking at 1 billion rupees. This is through Feb 6, and they're looking at this via bonds, and they are seeking bids for this one on Thursday. And then you have many more coming in as well in the very near future. For example, there is NHPC. They're looking at 20 billion. This is via bonds. And REC Limited is also looking at 1.5 trillion via NCDs in one or more tranches therein. Prestige Estates is the next one on my list there. 20 billion rupees is what they're looking at via NCDs. JSW Steel also is on a list which they're looking at 50 billion via NCDs. Torrent Pharma, by the way, is looking at 30 billion via NCDs. And then you have Axis Bank also looking at 350 billion via debt market therein. Finally, it is about Bank of Maharashtra. 100 billion is what they're looking at in sense of issuances. This is via infra bonds for FY26 itself.
All right, Manisha, thanks very much for taking us through the hectic activity that seems to be ongoing in the bond markets. On that note, we'll slip into a short break. When we return, more on the markets. Stay tuned.
Welcome back on to Corporate Conversations then. Joining the management of Acme Solar to discuss the road ahead for the company, Nikhil Dhingra, the CEO of the company, joins us. Nikhil, good morning. Thank you for joining in. You know, you have had a higher other income this time around, and your net debt has also seen a bit of an increase compared to last year. Could you attribute the reasons as to why this has happened, and do you see this as a one-off and the numbers trend down in the quarters ahead?
Right. So for us, other income is a core part of our income, because we have a lot of cash flows at the from the power sale, which is there in the SPV. So there is an interest income which is there, because we can take out money only once or twice during the year. So we had a 54% increase in the revenues and similar increase in the EBITDA. So the increase in the operational capacity resulted in the increase in the cash lying in these SPVs because of increased power sales. So that resulted in other income. And of course, this has been at this level for last 3-4 quarters. So, and that is because of the operational capacity increase. And in terms of the debt to EBITDA, we are at 4.2. It's a very healthy level. If you look at all utilities, comparable utilities, our net debt is close to 10,000 crores, and EBITDA is close to 2,500 crores. So debt, of course, we have around 80% of debt from the operational assets, which we have got refinanced, and weighted average cost is around 8.5%. But of course, the under construction debt is, we have moved on the execution of the projects that has resulted in the increase in the debt. And we are doing capex. As you know, there is a large capex happening. So a lot of execution planned for this year. Around 1.5 gigawatts of execution planned, which is essentially this. We are adding the same amount of capacity which we have currently. 1.5 gigawatt translates into around 3 gigawatts of operational capacity, which will be executed in this year. So that's the reason that the capex has happened. The debt has increased. Of course, it will result in EBITDA in the year next year.
Right. Nikhil, you know, the story for the company is pretty simple. With the existing capacity that you have, you've announced a big capex as well. It goes to about 10 gigawatts by 2030 is what we remember from what you had said to us last time. And as you keep on adding capacity, you've also signed a lot of PPAs. So it's basically a simple, you know, capacity being added and generation being increased and all of that flowing down to your overall performance. If you could give us a sense on how the prices are at right now for all the new PPAs that you're signing versus what was what was earlier. The sense one gets is it's trending downwards. That's point number one. And secondly, what's the kind of capacity that you've added over the last couple of quarters? What's the outlook?
Yes, yes. So it's an important question because you rightly captured that our business is dependent on getting new capacities, building those capacities, and running them efficiently. That's the whole business. So we have around 2.6 gigawatts of signed PPAs, which we are currently constructing. And all these 2.6 gigawatt has a weighted average tariff higher than 3.4, which we currently have for our 3 gigawatt operational capacity. And they have a higher CUF also, which is basically the utilization factor. So it's a revenue per megawatt is much higher. And the generation per megawatt of contracted capacity is also higher. So 2.5 gigawatts is the signed PPA number. We have 1.4 gigawatts of unsigned PPA, which we are expecting to get signed in couple of quarters. So these PPAs which have got signed were won by us between you can say 6 months to 12 months kind of a period long back. And these are all FDRE and hybrid projects. So their tariff gets locked in when you win the bid. So what you are seeing is you are right that the tariffs have come down, and they have come down primarily for the plain battery bids, which we have not participated much because that does not involve, you can say, around the clock power installation with a mix of wind, solar, and batteries. Right. So there the tariffs have come down, which we have not won. The recent bids which we have won in 3 months, where we have got railways and we have got that MP project. That has some that will get signed in let's say next 6 months, 3 to 6 months. But these PPAs which have got signed, they have a tariff higher than 3.4, which is our existing tariff. In terms of the capacity operationalization, so our capacity on a year-on-year basis is our revenue is up by 54%. That is because of the increase in the capacity in the last 12 months we have done. So in the next year, we are planning to operationalize 1.5 gigawatts of additional contracted capacity, which is around 3.3 gigawatts of solar DC capacity and around 4 gigawatt hour of battery. So that's the key installation which is going to happen in this year.
So with this kind of capacity addition that you are doing, Nikhil, what does that do to your financial performance in FY27? How much are you planning on growing your top line, your EBITDA, your margins, if you can give us targets for all of these metrics for the next year?
So what I can give target for is the capacity addition and the tariffs, like I mentioned earlier. So we have 3.4 is the average tariff. And the tariff is higher than this for the upcoming capacity of 1.5 gigawatt in this year. And EBITDA is more or less around 90%. This quarter we did around 91%. It has been hovering around that number for last 4 quarters, and that's because there are no variable costs in this business. It's almost fixed cost. So in terms of the so that's the broad numbers, and as revenue per megawatt will increase, so that's the key, and the because of 2 reasons. One is the higher tariff, and also because of the higher generation, because we are now building plants which have capacity utilization factor of 50% upwards, whereas the solar used to give a capacity utilization factor of between 25 to 30%. So that's where the 1.5 gigawatt will almost give, you can say, a similar effect as our current operational capacity of 3 gigawatts.
The envelope calculations do suggest 3,000 crore of EBITDA and 6,000 crore of EBITDA in the next 2 financial years, FY27 and FY28. That's a possibility, or are we far off from those?
So see, there is as you know, in terms of the capacity, there is a run rate EBITDA and there is an actual EBITDA versus the financial year closing. So when you basically operationalize a project, it gives revenue during the next 12 months, right? So when you operationalize capacity during FY27, so it will happen in phases during the year. Then, of course, it will keep on, it will give the full 12 months revenue starting from, let's say, that particular time when it is installing. So I would not be able to confirm or deny the numbers you are mentioning. But in terms of the PPAs are a fixed rate tariff for 25 years. The EBITDA is 90%. So I don't have the numbers to ratify. But these are the sort of capacities we are. It's a pretty simple business.
But they're not far off from what the estimates are, right?
Estimates would be yeah. So estimates would be around. I don't have that handy, but yeah, you can maybe you can check the numbers. I can't confirm or deny these numbers.
All right, we take that point, but we'll let the brokerages do those estimate analysis. I'm looking at a note coming in from a couple of them. They are targeting about 3,000 crores next year with around 5,700 crores the year after as well. Thanks a lot, Nikhil, for joining in. Always a pleasure speaking with you. But if you look at the markets right now, it is, even Stevens, the tug of war that everyone's been talking about, right? So it's fairly steady. The frontline indices, if you look at it, you'd call it a resilient market despite the kind of downward pressure that the IT index has been putting on the Nifty. So you have the Nifty, which is down just 25 points. So the IT index down 7%. That's because the Nifty Bank and Reliance are doing the heavy lifting. The volatility index has cooled off despite the pressure that we've seen on the markets from the IT index. So that's a positive. The other positive is that your portfolios would be feeling a lot better. Advanced decline is firmly in favor of advances. The reported mid-cap index number is lowered only because of the mid-cap IT weightage on that. The Nifty is now flitting between the 20-day moving average and the 50-day moving average. 20-day moving average is at 25,500 and the 50-day moving average around the 25,800 mark. So that's the range after the big up move that we saw in yesterday's session. And bulls also need not worry because the PCR is stable after an up move. You would have expected it to go towards the overheated zone of almost 1.2, 1.3. That hasn't been the case. It is stable. VIX down, the Nifty flat, and the PCR absolutely stable with more stocks advancing than declining is perfect for a bull standpoint. If you look at the range that the option writers are playing for, 25,700 put writers fairly active, 150 rupees premium, telling you 550 thereabouts would be the support, and 25,800 call writers, 131 rupees on premium, around 25,950 is where the resistance comes in. A lot of long positions added on these upstream oil companies. So Oil India is one which is fairly well bid. And some of these PLI players are, what do you call them, ER&D players, seeing a fair amount of short covering. Dixon, PG Electroplast, even Amber is fairly well bid today. We'll take a short break on that note, come back, the management of City Union Bank on the other side.
Welcome back. Let's get you a quick check on the macro signals for the day. The markets for now in the red. It's been a volatile day. The Nifty now trading with cuts of about 25 points and the Sensex trading with cuts of 170 points. The Bank Nifty holding up, though, with gains of 126 points. That's where we are at as far as the market is concerned. The rupee, after that gain of about 1.25% that we saw yesterday on the back of positive sentiments from the US-India trade deal, today it's weaker because of some renewed dollar buying that's happening from large corporates, now trading at 90.48 against the dollar. The 10-year yield, that fell by about 3 basis points yesterday. That was good news. Again, optimism around that trade deal getting announced. Today, again, it's trading further lower. And of course, on Friday, we'll get the RBI monetary policy. So more cues from that. For now, at 6.7% is where we're at on the 10-year. Oil prices, again, we saw a bit of a gain, 67.81. That's where the Brent is at. Escalated tensions between US and Iran. You saw, the Iran ship not attack, but posturing against the US. So all of that weighing on the sentiments, and that's where we're at as far as the macro signal is concerned. We'll get you more on the markets and, a chat with the management of City Union Bank when we return after this short break. Welcome back. Shares of City Union Bank are trading in flat today, even though the bank posted a pretty strong third quarter earnings. N. Kamakodi, the MD and CEO of City Union Bank, joins us now to give us more on what went by in the quarter and what the year ahead looks like. Mr. Kamakodi, thanks very much for being here. Starting with your guidance, All right, Mr. Kamakodi, do hold on. We have the Sebi chief speaking, and let's take a look at what he's saying.
सर जो चर्चा चल रही थी कैश मार्केट को डीपन करने के लिए मार्जिन्स कम किए जा सकते हैं और एसएलबीएम फ्रेमवर्क को भी स्ट्रेंथन करने के लिए एक वर्किंग ग्रुप था सर उस पर अगर कुछ अपडेट
तो दोनों ही प्रपोजल्स हमारी बहुत एक्टिव रडार में हैं ट्रेडिंग लिक्विडिटी इंप्रूव करना हमारे जो मार्केट में कैश मार्केट में वो बहुत इम्पोर्टेंट ऑब्जेक्टिव है हमारे लिए क्योंकि उससे बहुत सारी जो लिक्विडिटी की इश्यूज लिक्विडिटी टर्नओवर बढ़ने से मार्केट की जो स्ट्रक्चर है वो इम्प्रूव होती है तो इसलिए हम दोनों चीज़ों बहुत एसएलबीएम फ्रेमवर्क में हो या फिर मार्जिन के इश्यूज में हो उसमें हमारे कंसर्न कमिटीज़ और हमारे कंसर्न ऑफिसर्स हैं वो सब स्टेक होल्डर से बातचीत कर रहे हैं और उसका आप रिजल्ट शॉर्टली देखेंगे और दूसरी बात ये है कि जहां आप एसटीटी की बात कर रहे हैं उसमें भी थोड़ा सा ज़्यादा डिफरेंशियल भी क्रिएट हुआ है बिटवीन द कैश मार्केट एंड द डेरिवेटिव्स मार्केट
तो सर एसएलबीएम में ब्रोकर्स की ये भी मांग है कि सेबी अगर वर्किंग ग्रुप बना रहा है तो जो मेन एजेंडा है जिसमें अगर एक लेंडर है तो उसका भी उसके भी सारी डिटेल्स एक तरह से सेटल करने के लिए जीएसटी जो लगता है सर उसके ऊपर कोई प्रपोजल है कि वो एक लेंडर के लिए ना जरूरी हो अगर एक डिटेल आ रहा है जैसे मैं ही अगर ले लूँ एसएलबीएम का पार्टिसिपेशन इफ आई डोंट हैव अ जीएसटी नंबर देन हाउ विल आई बी पार्टिसिपेटिंग इन दैट
देखिए आपको थोड़ा इंतज़ार करना होगा वो लोग सब तरह के इश्यूज की बात कर रहे हैं तो क्या उसको कौन से बैरियर्स होल्ड कर रहे हैं वो सब बैरियर्स को आइडेंटिफाई करके हम उचित कार्यवाही उस पर करेंगे
Sir, money bonds despite several efforts it has not yet picked up what could trigger this
यू आर टॉकिंग ऑफ बॉन्ड्स
municipal bonds
हाँ म्यूनिसिपल बॉन्ड्स में देखिए सबसे पहले तो उसमें एक अवेयरनेस का इशू रहा क्योंकि म्यूनिसिपल बॉन्ड मार्केट के लिए इशूअर्स जो हैं वो म्यूनिसिपैलिटीज़ हैं और म्यूनिसिपैलिटीज़ एक लोकल बॉडीज़ हैं और उनको बॉन्ड के बारे में और करने में समझने में भी टाइम लग रहा है बट ये अब प्रोसेस इस स्थिति में पहुंचा है कि बहुत सारी म्यूनिसिपैलिटीज़ आगे आई हैं मैनी म्यूनिसिपैलिटीज़ हैव कम फॉरवर्ड to issuing the bonds and 12 such bonds have been issued and there are many cities which have come out with the bonds. Secondly, there is a great deal of like budget announcements are clearly indicating that the government support will be forthcoming for the municipalities who will be issuing the bonds. So therefore this municipal bond market right now I agree with you at this moment it is very nascent. Very nascent, it is next to negligible compared to what we need for urban infrastructure. But it has got a very big potential because once every state starts doing it, and we have doing outreach program with all states, when every state, some key municipalities start doing it, then there will be a greater, because they have now started understanding what the market is.
All right. We were hoping to hear more from Tuhin Kanta Pandey on the STT hike, but not much there other than the differential between the cash and derivative market, he said, has increased. But let's get back to earnings. And Mr. Kamakodi is still here with us from City Union Bank. Mr. Kamakodi, apologies for that cut-in, and thanks very much for staying back on. You've given the street a guidance of growing in the mid to high teens, 15 to 20% kind of a growth. What will drive that? And specifically in unsecured, how much of a headroom do you have given some of the asset quality pressures that lenders have been telling us seem to have abated?
We have always concentrated more on the secured front, starting with the MSMEs, commercial trading, and we added secured retail, particularly housing loans, loan against property, rental discounting and all. So these over the period of, in 2024 onwards, we have started building up the team, and around the end of 2025 calendar year, we were able to see the growths improving, and the machineries are by and large set. So we had our 21% growth for the third quarter on year-on-year basis. And we have not gone into, let's say, in a significant way on the unsecured retail so far. And that strategy will stay for many more quarters to come before we set, if at all we see on that line. But as of now, we are going purely on the secured lending on MSME, commercial trading, gold loan, and agriculture, along with now the secured retail of, let's say, housing loan, LAP, and other things. So we feel we are spending some time on setting up the team, and we never had a concept of sales team in our bank in the past. It's only in the last couple of years we have been verticalizing these sort of business lines, and like say the sales units and all are now set, and they have started delivering. In fact, we said year before last, it will be like say last year it will be making some loss, and for the financial year 2026, it will start making break even, and then from next year onwards, it will start adding to the profitability. In fact, it has started adding to the profitability this year itself, slightly ahead of whatever we had anticipated.
So we take that point, Mr. Kamakodi.
Given us confidence that.
Right, we get that. 21% loan growth doing very well, mid to high teens. You are confident that this sustains. The margins, that was a key positive of this result as well. How much of that is sustainable? Because parts of that is because of your gold loan, making it fixed rate. How much of the repricing there is left? And even deposit repricing, that's something that you've done. So if you could give us a sense on margins, basis all these factors.
Yeah. See, basically, as you rightly said, we started the fixed rate gold loan year before last, and the entire gold loan portfolio has by and large converted into a fixed rate portfolio already. So we don't expect any shock. At the same time, the repo rate cut passing on, it has happened only towards the end of the quarter. So the impact because of that will be slightly higher in terms of reduction in the yield and advances. At the same time, it will get compensated by we have, as we discussed it in the con call and all, another 2-3 quarters going forward, whatever term deposits which is maturing and repricing happening at a lower rate, will be getting the benefits to compensate the for whatever yield reduction happening on the asset side because of the repo cut. So overall, we are confident that the whatever margin we currently have is sustainable with the plus or minus 10 basis point.
All right, the margin is sustainable. In a quick word, sir, the CD ratio at 86%, are you comfortable with that? And your guidance for what kind of deposit growth you would have? In just a sentence, sir.
See, the deposit growth will definitely be in tune with the credit growth, so that there won't be any, like say, stoppage in the credit because of non-availability of the deposits. Consistently, we have maintained that we are comfortable with the CD ratio of about 85 to 86%, and we are in that range only currently.
Okay, comfortable with the current range, and that's where you hope to say, Mr. Kamakodi. Thanks very much for joining in with that. Pleasure speaking with you. On that note, we'll just slip into a short break. We'll get you more on the markets when we return.
Well, the bulls are still fighting to hold 25,700 even as the sell-off in the IT stocks continues to extend. Infosys is now down 8% as we speak. The market cap erosion of the top 5 IT companies has now reached 2 lakh crore rupees. Take your leave on this edition of Trading Hour. From Ritu Mangalam and me, thank you for watching. Halftime report on the other side.